Hi there. In this video, we're going to look into the share capital and retained income note problem in the June 2022 Accounting Examination Paper 1. The question paper that is used in this illustration is the property of the Department of Basic Education in the Republic of South Africa. It has been used in this video for illustrative purposes only. Although our interest is on the share capital and retained earnings, we will provide as a bonus the solutions to the opening multiple choice questions. The multiple choice questions start from question 1.1. 1.1.1, you have to fill in the missing word from the choice of the set given to you. Are employed by the company to set up and monitor control processes. The answer key to question 1 is internal auditors. The reason is because they are not independent from the company, since they have an employer and employee relationship with the company. And another key indicator from the question is that they oversee the internal controls of the company. 1.1.2 are appointed to give an unbiased opinion on the financial statements. The answer key for the second question is external auditors. The reason is because they are independent of the company to an extent that their objective of expressing an unbiased opinion on the company's financial statement needs not to be compromised. 1.1.3 are appointed by the owners of the company to perform key management functions. The answer key for the third question is directors. The reason is because they are appointed to perform management function. Out of all the provided sets of answer keys, directors are the only ones that performs management functions. Let's now move to our point of interest to question 1.2. The most important starting point when you answer questions that are similar to 1.2, in a sense that so much is happening during the financial period that might affect subsequent and previous periods, is to start with the timeline. The timeline from this question is a 12-month period starting from 1st of March 2021 up to 28 February 2022. Then we go ahead and construct our timeline. The next step is to look into the requirements so that you'll be able to narrow down the scope of your expectations of what you need to do. Requirement 1.2.1 is to complete the note to the statement of financial position, the ordinary share capital note, and the retained income note. What I like about this requirement is the fact that it shows the link between these two notes. Each and every time when they give you one of these notes as a requirement, think of the other note. The next step is to present the skeleton structure of these notes, then fill in what has been given to you in the skeleton. Then try and fill out what hasn't been given unto you. The structure to the share capital note start with the ordinary share capital balance at the beginning. Please allow me to use these abbreviations. However, for exam purposes, make sure that you write everything in full. Then followed by the shares repurchased during the year. Then followed by additional shares issued. Then the balance at the end. On the left hand side of your skeleton is the quantity, figures of the shares. Then on the right hand side of your skeleton is the rand value of the shares. The structure for retained income note starts with the retained income balance at the beginning, the retained profit after taxation calculated from the income statement, then shares repurchased during the year. The repurchase figure is calculated as the premium value above the average share capital, then followed by a subtraction of the dividends accrued and paid for the year, which is your final dividends and your interim dividends respectively. Then we get to the balance at the end of the year. But then we will get to the skeleton later on. Now what we'll want to do is to start by filling in what we have on the ordinary share capital note. We go back to our information that has been given unto us. We see that we have ordinary share capital line on the statement of financial position. The opening balance hasn't been given unto us, but we have the closing balance. So that is what we're going to start with. We go to the ordinary share capital balance at the end. We have 7,954,000. Then we go to the additional information that has been given to us with respect to ordinary share capital. The information in this question paper is given in section B. Starting from the opening date, which is the 1st of March 2021 up until the closing date, the 28th of February 2022. What do we have in the opening date? We have that 75% of the authorized share capital of 1.2 million ordinary shares were in issue. Therefore, we have to compute the 75% of 1.2 million and find out how many shares were in issue. You have 0.75 as your 75% multiplied by your 1.2 million. Then you have the answer that it's 900,000 shares. This is the quantity at the beginning. The next question I should be asking myself is the rand value of these shares. Since the balance at the beginning wasn't given to me, I won't be able to know the rand value at first hand. This means I need to find another way to solve this problem. On to the information that has been given to me, I find that on 30th of August 2021, 80,000 shares were repurchased from a retired shareholder. He was paid 20%, which is equivalent to the value of 136,000 above the average share price, and will no longer qualify for dividends. The information that the shareholder will no longer qualify for dividends is important when I calculate my interim dividend and my final dividend. Now, let's fill in our skeleton. Our repurchase, we know that it's the value of 80,000 shares. However, the figure that was given to me, I'm given the premium value which I need to take to the retained income note. What do I have that can help me to see what was my average value that needs to be on my share capital note? Since the information that has been given to me, it shows that the value that represents the premium, which is 20% above the average, is equals to 136,000. What I can do is to come up with the formula and construct the relationship between the average and the premium. I know that if I say 100% represents my average, which for now is my unknown, I can have my 120% be a representation of my average plus my premium of a value of 136,000. What I need to do is to continue and try and cross multiply and see what I get. But first, before I do that, I want to convert my percentage values. So for this formula to look like this, 1 is equal to X and my 1.2 is equal to my average plus my premium. Then I have to cross multiply. I'll have on the left hand side my average plus my premium of 136,000 given by my 1.2 of my average. Then I can do a mathematical transposition where I take my 1.2x to be on the left hand side and my 136,000 to be on the right hand side. It gives me the following structure. Now I have my x minus my 1.2x. This will give me my minus 0.2x is equals to my negative 136,000. Since I want to know the average, I have to divide by negative 0.2. Divide by negative 0.2. Then I have my x equivalent to my 680,000. Now I know this represents my average at which the shares were repurchased. Therefore, I go back to my skeleton and try and fill in the rent value of the repurchased is 680,000. Excuse me, 680,000. Since we now have the number of the repurchased shares and the rent valuation of the repurchased, we can now compute what was the average. Therefore, I can say my 680,000 divided by my number of shares of 80,000. Let's do this on the side. 680,000 divided by 80,000. The solution to this problem gives me my 8.5, which was my average price. Remember, we didn't have a way in which we can calculate our opening balance valuation. We can now use the average price and multiply it by the number of shares in issue at the beginning so that we can be able to find the rent value at the beginning. How can we do this? We can say our 8.5 multiplied by our 900,000 shares which were in issue at the beginning, then we get our value of 7,650,000, which is the valuation of the shares which at issue in the beginning. Then, since we now have at least all the values required to complete the skeleton structure and only one unknown value, we can be able to compute the additional share price valuation using the balancing figure method. But before we do that, let us first fill in the quantity side on the number of shares. Let's go back to our information paper. We see that 150 shares were in issue at 1 December 2021, additional shares. So we go back our skeleton, we add 150,000 of shares. Then we can do a total and compute our 900 minus 80 plus 150,000. Let me call my calculator so that we'll be able to find the answer. We have 900,000 shares minus 80,000 shares plus 150,000 shares is equals to 970,000 shares, if I'm not mistaken. Yes, that's correct. Then what we need to do In order to calculate the balancing figure, we need to take our balance at year end, which is 7,954,000. Then we add the figure for the repurchase of shares, which is 680,000. Then we subtract the balance at the beginning, which is 7,650,000. Then we get the balancing figure as 984,000. Now we have completed our part to the share capital note. Let us move on to the retained income note. Remember, we didn't write the skeleton before, we only laid out how the structure will look like. Let us go back and start with the structure. You have your retained income at the beginning. Then you have your profit after taxation. Then you have your shares repurchased. This is the premium value that we input here. Then you have the dividends payment. The dividends payments consist of your interim dividend and your final dividend. What we need to do, we need to find the rent value of the opening balance. Let us go back to the information that has been given to us. Retained income opening balance wasn't given unto us. Therefore, we have the same problem as when we were dealing with our share capital note. What we have is the year end closing balance. Then we can go ahead and extend our skeleton to have the balance at end. Then we input the value. The valuation is equivalent to 1,196,000. 1,196,000. Right. Then what can we be able to do is to calculate the net profit after tax. We need to refer to information C on our question paper. The net income tax for the year after taking into account all adjustments amounted to 438,000. This is 30% of the net profit before taxation. What has been given to us is the taxation value on 30% of net profit before tax, which is equivalent to 438,000, which is our taxation value, divided by 30%. This gives us 1,460,000. This is the net profit before tax component. Now, our skeleton wants the net profit after tax. Therefore, now it's simple to get there. We say our net profit before tax minus our net profit after taxation value, which gives us our 1,022,000. Right. Shares repurchased, it was already given unto us as the premium of 136,000. For our dividends payment part, we only need to know the difference between interim dividend and the final dividend. Interim dividend is usually declared mid-year and also paid to shareholders during that financial period. For our final dividend, it is declared at the end of the year and paid in the next financial period. This represents the accrual part of your dividends. 31 August, let's go back to the information sheet. 31 August 2021, interim dividend of 28 cents per share was paid. Therefore, the dividend was paid on 820,000 shares. Why are we saying it's 820,000 shares? The movement that can be also seen on our share capital note represents the following. We had 900,000 shares, then we bought back 80,000 shares. Then between this period, before we even issued additional shares, we declared the interim dividend and we also paid it. Therefore, our 900 minus our 80 gives us our 900,000 minus 80,000, then it's our 820,000. Then we have 820,000 shares. Then they were declared at 28 cents. We're going to say multiply by 0.28. Then it gives us the value of 229,600. Now we can take this value, fill it in on the interim dividend, 229,600. Then we have the final dividends part. The same approach will be followed for final dividends if we were given how much were the shares declared at. Except now, instead of using the 820 shares, we will use the number of shares at the end of the year. We still have a problem. We need to determine what is our final dividend declared at. What we know is that this is the accrual part. If we consult our statement of financial position, let's go back to our statement of financial position, we find that the figure at the end of the year is represented by 213,400, which is the accruing part reflecting on our statement of financial position. Therefore, based on the definition of what is our final dividend, we can take this value as representing the portion of final dividend declared, 213,400. Right. Then we can combine these values and total them here at the top. To close off our requirement, we need to compute our opening balance. We are in the same situation as we were previously. We need to make it as a balancing figure. For the purposes of this video and this tutorial, I won't be computing the opening balance. I want you to do it yourself. You will take the year-end balance, you add the dividends payment, you add the shares repurchased, then you minus the profit after tax, then you will get the opening balance. If you have any questions, feel free to drop me an email, which is on the description on this video.